Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody had a great weekend. Happy Father's Day to all you fathers out there, to anybody who has a father out there, to anybody who knows a father out there. Happy Father's Day, and I hope everybody had a great one. So let's go ahead and get rolling. We had a pretty big pullback in the markets on at the end of last week, and we're going to talk about what does it look like ever since then. And if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, get that thumbs up at the very least. Helps a lot. Let the computers know that people actually watch and that they care. So let's get started. All right, starting with the S&P. Now we're up 14 points this morning. Interestingly enough, last night we were looking at this thing last night in our live trade room, and we had a little bit of a breakout just below this line here. Now, funny enough, as I had my first target set at 41.30, and price came and it nicked my first target. But I decided, you know what? Let me move it down a little bit to about 41.20. And so I didn't. My target didn't get hit because I moved my target down to 41.20, trying to be a bit greedy. And it came back up and hit my stop as it stopped back out above here. That's okay. Those things happen, right? And so with that being the case, one of the things that I would say is that our 4-hour trend is still indeed to the downside. And we're putting in a bit of a 4-hour reversal candlestick here. Now, we're not certainly completed with the printing of this candlestick, but by the time you watch this video, it might be pretty close to printing. If this candlestick looks anything like this, look for a potential candle-to-candle reversal trade off of here on the 4-hour chart. The 1-hour chart's already coming down with that move. Now, may we, might this hold? Absolutely, it might. But if we take a look at at our big picture trend is telling us that the markets are trending to the downside. Now, if we get above here, get above this region here with a bit of basing, then I think you can probably run it up until these areas of 15-minute supply up here at about 41.95. The NASDAQ looks like a pretty similar picture. NASDAQ is sitting just above its all-time high. Certainly, we've got an all-time high breakout area up here. We've got two pretty good levels of demand down below us. One would be this little rally-based rally, and one would be this wick over wick level here on the hourly chart. Now, since I've got a level on top of a level identified there, what we've done is we say the first level is a confirmation entry. The second level is a limit entry for price as an opportunity to get long. That being said, everything essentially has to be a confirmation entry if we get below here, because then we would have a lower swing low and a lower swing high. Crude oil is continuing its march higher, but it's stalled just a little bit. So in our stall, we've got a potential breakout point here above 72.30. We did have a couple of nice reversal levels on there. If I go to a 15-minute chart, we will see that this area here is a pretty good valid reversal point, 70.53 by 70.43. I'm going to put this one in. It's a 15-minute level, so it has to be in pink. So that would be the area for a potential reversal in crude oil, but not a lot of great movement in crude at the moment. Although I can see us, if we get below here, we clearly have a lower low and a lower high. Now, the next one would be gold, and I've talked a lot about gold in that I felt like gold was going to make it to 2,000, and I'm man enough to admit when I'm wrong, because when my 4-hour trend gives me lower swing lows and lower swing highs, that tells me that okay, this train may be coming off pulling off the station, and that's what happened is we pulled off the short station, and now we've got a setup below us for a potential breakdown. Now, this occurs in combination with the dollar gaining a bit of strength. So as the dollar gains some strength, we've seen gold has really started to sell off and become that much weaker. We do have a little base drop here at 1805 by 1809, and then another wick over wick here at 1827 by 1831. Potentially a breakdown here below 1760. As far as a long goes, if you're looking for a long, I'd need to put in something higher than 1797 before I would consider a long, although our momentum to the downside is probably slowing down just the proverbial smidge. I will say that in our things like the euro, those of you that are trading in the forex markets, we we have, I think, a decent area for a potential breakdown below these Globex lows. If the dollar continues to rally, and the dollar, if the dollar continues its rally, let me turn this to show overnight trading. There we go. So if the dollar does continue its rally, as we're starting to see that the U.S. dollar is coming into this area of demand right here, then that would be some weakness in our currency markets, as well as lend itself to more weakness in gold. So they're all kind of tied together. One thing I will highlight about the S&P this week is that when we look at a weekly chart of the S&P, and I'm going to pull up a weekly chart, we closed on the low, right? We closed on the low last week, and that's a pretty bearish candlestick to close on the low. I want to pull out every other time that the S&P has closed on the low in the last 3 years. Now, why does that matter? Well, because price has a bit of memory, and trends tend to reverse themselves. So there was a time that we closed on the low of a weekly chart. Here is where we closed on the low of a weekly chart. Here we closed on the low of a weekly chart, and here we closed on the low of a weekly chart. Oh, and here we closed on the low of a weekly chart. So it frankly doesn't happen all that often, but when it does, most of the time, not all the time, most of the time, what you'll notice is that red candle is followed by a green, red followed by green, red followed by green, red followed by red, red followed by green, red followed by green, red followed by I don't know yet. So just keep that in mind. It's not always the fact that we had a bearish week that we're going to get 2 consecutive bearish weeks. It does indeed happen, no question, right? We do see that sometimes that occurs and it causes yet another drop, which is what we saw here at the end of, was that 2017? But not always, end of 2018, excuse me. But doesn't always happen that way. And so now what I'm looking at is, we may wind up very well may wind up with a bullish week, and that's why I'm so interested to see, do these areas here tend to break, right? And then that would give us an opportunity to get long on a strong rally above some of those resistance levels or breaking through some of those resistance points. Hasn't happened yet, and so we still maintain our overall trend following stature. But the key thing that I want to put in here is don't get married to a direction, right? You want to be dating it serially, meaning that it's something that's going to change based upon what the market gives me. And if I'll be a serial dater as long as I can shift my directions quickly and follow the trend. All right. So speaking of following the trend, let's talk about something that has changed trend in our stock of the day. So our stock of the day today is going to be Home Depot. And I say it's changed trend. Well, it's not really changed trend. It changed trend a long time ago. Ever since the beginning of May, this thing has really started to come hammering down. We've seen Home Depot gain a lot of weakness. And really, if you think about it, I mean, there's jokes all over the internet about the fact that buying wood is like buying gold. Well, that's definitely taking an impact on the sales. In that company, and it's not just Home Depot. You're also seeing it in Lowe's as well, both Home Depot and Lowe's. Now, both of them are coming to some decent areas of support, and what I'm looking at is where because fundamentally not a whole lot has changed, and we're seeing lumber prices starting to come back down. Where would I see a good buying area? Well, I think in Home Depot I see a good buying area somewhere down in here. Well, what about if I wanted to take more of a smaller time frame trade? Well, I do have an hourly level that I look at here that we've rallied back up into, that you could get a bit of a reversal back off of this trade. So I think Home Depot, for a small time frame trader, does set up for a really nice reversal trade off that hourly chart. So if you're looking for a potential reversal trade, look at Home Depot somewhere below 302. You can place your stop right here above 305 and make it more of like a day trade. And then if I look at Lowe's, you've got another opportunity with an entry below 186.25, but then your stop at its tightest would be about 188.30, and so that's a day trading opportunity utilizing the hourly chart in both Lowe's and Home Depot. But I do think that overall, you're going to have potential buying areas a bit lower at these areas of demand or support. Lowe's being further, or Home Depot being a bit further away, as it's the areas down here at about 282. So that's all I have for today, everybody. I hope you guys have a phenomenal trading day. If you have any questions, as always, send us an email. support@tradersarmy.com. I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.